Rare Earth War, a global plan to break China's grip, and why India has become a key player. Imagine this. Tomorrow morning, your electric car can no longer be manufactured. The supply of smartphones comes to a halt, and parts for fighter jets fail to arrive on time. What would happen then? The fear is not just about technology. The fear is about that invisible control which has slipped into the hands of a single country. That fear is being felt today from Washington to New Delhi. And in the middle of this fear, the United States has put forward a proposal that could change the global power structure for decades to come. More than 50 countries, a high-level meeting held behind closed doors, and India right at the center. The question is not what the plan is. The real question is, who is this plan against and who is it for? America has now openly accepted that its dependence on China has become a strategic risk. Rare earth elements, lithium, nickel, cobalt, these are not just mining terms. They are the backbone of modern civilization. From semiconductor chips to electric vehicles, from renewable energy to advanced weapon systems. Everything depends on these minerals. The problem is that while mining of these minerals happens in many parts of the world, control over processing and refining largely rests with China. Through decades of planning, state support, and aggressive pricing, China has built an ecosystem that is not easy for the rest of the world to exit. Over the past few years, whenever geopolitical tensions have risen, Beijing has used rare earth exports as leverage. Sometimes through regulatory restrictions, sometimes through export controls. And the impact has been felt directly on factories. Automobile plants in Europe stalled, defense suppliers in America faced delays. That was the moment Washington realized this is not just a trade issue, it is a national security question. From this realization was born a new idea, the Critical Minerals Trading Bloc. At this ministerial level meeting held in Washington, representatives from more than 50 countries took part. America's message was clear. When it comes to minerals, a free-for-all can no longer continue. The plan is to bring countries with mining, processing, and refining capabilities into a coordinated bloc. Within this bloc, pricing mechanisms, trade rules, and supply chain investments will be managed collectively. The aim is not just to break China's monopoly, but also to make alternative supply chains economically viable. While publicly pushing this proposal, US Vice President J.D. Vance said clearly that the dumping of cheap minerals has destroyed the competitiveness of Western manufacturers. When a country uses state-subsidized production to artificially push prices down, private investment in other countries naturally backs off. Mining projects are long-term, risky, and without price stability, investors do not step forward. This is the imbalance America now wants to correct. The core idea of this new trade bloc is somewhat radical. Member countries will set reference prices for critical minerals. From extraction to refining, there will be benchmark pricing at every stage. If global market prices fall below these benchmarks, adjustable tariffs will be used to maintain a floor price. In other words, the market will not remain fully free, but strategically managed. Critics are calling this market interference, but Washington's argument is that when there is a strategic vulnerability, a purely free market becomes a luxury. Over the past few years, the Trump administration had already signaled direct intervention in strategic sectors. Equity stakes in certain mineral companies, subsidies for defense-linked industries, and public funds in the name of supply chain resilience. All of this was part of the same thinking. Now, in the case of critical minerals, the same approach is being applied at a global scale. Who all were part of this conversation is a story in itself. According to US Secretary of State Marco Rubio, representatives from 55 countries were present at the meeting. Countries like Australia and Canada are raw material exporters. Japan and Germany are strong in downstream manufacturing and high-end technology. Countries like the Democratic Republic of Congo hold strategic reserves of cobalt and copper. And within this mix sat India, a country that now aspires to be not just a market, but a manufacturing hub. Traditional allies like France and the UK were also part of the discussion. Interestingly, Greenland and Denmark did not attend this meeting, even though the Arctic region is believed to hold massive mineral wealth. US Interior Secretary Doug Burgum indicated that in the coming days, 11 more countries could join this proposed club, and more than 20 countries have already shown interest. This means it is not just an idea. It is a rapidly expanding framework. Now the question arises. Where does India fit into all this? At the Washington summit, India was represented by Foreign Minister Jaishankar. He stated clearly that critical minerals have now become a central issue for both economic growth and national security. Overconcentration in global supply chains is a risk, and it can only be reduced through collective action. India has been a partner with the US in this area for the past few years, and now this partnership appears to be taking an institutional shape. India's timing is also strategic. Recently, a trade agreement between India and the US was finalized, under which US tariffs on Indian imports were reduced from 50% to 18%. This shows that the broader trade relationship is already in a warming phase. Cooperation on critical minerals pushes this momentum further. At the domestic level too, India has not been sitting idle. In the 2026 Union Budget, Finance Minister Nirmala Sitharaman clearly signaled that India is preparing to make serious investments in the critical minerals ecosystem. Dedicated rare earth corridors were announced in mineral-rich states like Odisha, Kerala, Andhra Pradesh, and Tamil Nadu. These states are strategically placed not just for resources, but also for ports, industrial clusters, and logistics infrastructure. India's focus is not limited to mining alone. Developing processing and refining capacity is the real challenge because that is where value addition happens. This is the game China has mastered. Raw material from elsewhere, final processing in China. India now wants to fill this gap. Its semiconductor ambitions, EV manufacturing push, and renewable energy targets all depend on a stable supply of minerals. Naturally, China's reaction has also come. Beijing has rejected the narrative that it has destabilized global supply chains. The Chinese embassy in the US stated that China has always played a responsible role in keeping the global supply of critical minerals stable and remains open to cooperation. But the reality is that export controls have become stricter than before. And despite the trade war, Beijing's grip over rare earths has not loosened. This is where the story becomes even more interesting. This is not just about the US versus China. This is the story of a world where supply chains are no longer purely economic. Politics, security, and technology have merged into one. Critical minerals are now playing the same role that oil played in the 20th century. The country that has control holds leverage. For India, this moment is both an opportunity and a test. An opportunity because global players want to seriously implement the China Plus One strategy. A test because mining reforms, environmental clearances, local resistance, and long gestation periods are very real hurdles. If India manages to build processing capability, it can become not just a supplier, but a price setter as well.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources: news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.